Jeremy. I would like to hand over the floor to Clio, our moderator for today.
Thank you, Adnan. Hi, everyone. We just had a 1.5-hour session with the cohort, so hi again to you, but welcome to all our panelists. It's a great pleasure to be here with you today. We have a set of questions for you, and I think the interest of the topic will be very much based on the diversity of the profiles of our panelists. So we have Proptech experts at the global level, but we also have a lot of specialists in the region over here. And I think for the cohort, actually, this combination of insights will really give you additional value, and hopefully that will give you additional reasons to come and set up here in the region. Before we get started, just maybe a quick word about myself for the panelists that I hadn't got the chance to meet already. My name is Clio, based in the UAE for 14 years. I work with a large holding here in strategy, but also involved in innovation with an incubator, and also collaborating with startAD occasionally with great pleasure, such as this opportunity today. That's about me. Now let's move on. We have a fantastic panel over here, and I would like, if you allow me, just ask you very quickly to introduce yourselves, just looking at the fund, the sectors that you cover, the stages, and obviously the geography, because it will give some additional flavor, but the following up questions that I may ask to you. Mauricio, if you want to start.
Absolutely, my pleasure. Thanks first for inviting me. I'm Mauricio Weiss, one of the 3 GPs at Zacua Ventures. Zacua Ventures is an early stage, primarily construction technology fund on a global scale. The 3 of us are based in different locations. I'm based in Madrid, and from here I cover Europe and Middle East. My partner Vivian, based in San Francisco, covers North America, and the other one based in Singapore covers Asia. Sorry, I think someone's now muted. So we focus on early stage technologies from pre-seed all the way to Series A. We're a $50 million fund. Ticket sizes ranges from $250K all the way to $2 million. We have so far 7 investments. It's the fund was launched in March last year, though the 3 of us, we've been investing out of different CVCs since late 2016, so quite experienced now in this industry. And the 3 areas of focus are sustainability, as you can see on my background, productivity, and urbanization solutions.
Fantastic. Thank you, Mauricio. We definitely have a focused question on sustainability. Moving on to Christos.
Hello, everyone. My name is Christos Mastoras. I'm the founder and managing partner of Iliad Partners. We're an early stage tech VC based out of UAE in AGM, focused on B2B companies. Our scope geographically is MENA, with a focus on UAE and Saudi. In terms of sectors, we invest in fintech, proptech, logistics, and edtech. And our focus is on pre-Series A and Series A companies, helping them grow within their home market and then expand across the region. Iliad Partners was launched in 2016. We were early investors in Trucker. From my side, I have about 23 years of experience in tech in different capacities. I started my career in management consulting, moved over to tech corporate. I worked on 4 different startups over time, and look forward to the panel. Thank you so much.
Fantastic. Thank you, Christos. Dhruv, to you.
Thanks, Cleo, and thanks for having me on the panel. So Biolabs is a London-based VC, very much focused on the early stage. We invest at pre-seed and seed stage. The fund was founded back in 2015. Over the last 8 years, we've now made 80 plus investments, predominantly focused in Europe. The latest fund, which is Fund 3, is more global. The current fund is $90 million. And we partner with companies to play a very active role through and help them and support them through our network of LPs and wider ecosystem of real estate developers and asset owners globally. So we have 21 strategic LPs that are some of the largest developers. More than half of them are listed across 11 countries. And that's essentially the kind of support that we can provide. In terms of sector focuses, of course, historically, we've made several investments on the PropTech side, but more recently, we've made and shifted our focus on sustainability, climate tech, mobility, and those are areas that we're keen to invest more in the future. Thank you.
Fantastic. Thank you. And we'll also have a question about those value-added services that, VCs could actually provide, including creating bridges for better access to markets. GP, hello, good to meet you. Please,
Hi,
if
Clio.
you may do a quick introduction as well from your side.
Yep, thanks, Clio. Thanks for having me as well. Hi, everybody. I'm JP Bowgen. I'm part of the investment team of Camber Creek. As a fund, we've been investing in PropTech for well over a decade at this point. Just raised our fourth vehicle about 18 months ago. It's a $325 million fund four. I sit in Zurich and I help spearhead opportunities coming out of Europe and the Middle East. And the way to think about Camber Creek as an investment firm is we try to be exceptionally helpful to the founders that we work with. We do so by partnering with a very large network of strategic investors in our own funds who are excited about PropTech, excited about adopting PropTech, and can hopefully become customers for the companies that we fund. In terms of the part of the value chain where we're interested in, we have flexibility to invest in construction tech and flexibility to invest in PropTech. We are fairly opportunistic and just look for our network to be extremely valuable to the founders that we ultimately invest in.
Wonderful, thank you. Fethi, I guess that, introduction about yourself more than fifth wall, as I guess everyone knows about fifth wall, but please, go ahead.
Sure, and okay. So my name is Fethi Kirdar. Thank you very much for having me as well. So I recently joined Fifth Wall. I had the coverage of the MENA region. As probably most of you know, Fifth Wall is the largest, most active venture firm focusing on real estate technologies. We essentially have two strategies. One is pure prop tech, as it is, and the other one is climate tech for the real estate industry. And we have about 3.2 billion AUMs across a number of funds. But initially we started off as purely focusing on pure prop tech, which we view as more kind of software related, versus the climate tech, which is slightly more on the hardware, which we can talk about later. We're also, like my peers here, we're quite unique in that we have a large number of strategic LPs, and that we have over 110 real estate owners, developers, investors that are investors with us and are partners with us. And we have a dedicated team that basically kind of manages those and really helps with the value creation, and as a distribution channel for our portfolio companies to access these real estate groups globally. We started in the US, but we also have a European dedicated fund. We just recently opened a presence in Asia, and we're doing so in the Middle East as well with my joining. We focus on everything through different kind of funds, everything from pre-series A all the way through to kind of pre-IPO and different stages of PropTech and climate tech.
Wonderful. So beautiful panel, floor of panelists. From the other side, we have also a beautiful cohort, and I hope that each one of the panelists also had some time, but what I can briefly tell you about, there is a lot of SaaS solutions, but also a lot of energy efficiency, and one solution on the hardware side with glazing. So beautiful range also, of type of solutions. In order to make this panel discussion the most fruitful for both, the participants and the panelists, of course, probably just, give practical tips or give some actual examples that you've worked on either in the region or globally. I think these are the ones that strike the most. All right, with all this, I just wanted to start the panel discussion, giving a bit of a broad perspective. So obviously a lot of uncertainty from an economic perspective right now happening, but at the same time, we have a very dynamic, clean energy, climate change kind of discussion. What is your outlook for the property industry in the next 2 to 3 years? If you wanted to shed some light, maybe Fethi, with you, as you have really this global perspective, specifically in the Proptech industry.
Yeah, the way we see it is that the real estate industry in general has always lagged in terms of technology, in terms of modernization, or kind of bringing technology into that sector. So while maybe 5-6 years ago there's been $4 billion of investments in Proptech, today it's about 32 billion, but it's still a very small percentage compared to other industries. So the real estate industry is the largest industry as percentage of GDP generally in most economies. Yet it's always had the least amount of kind of investment in technology, unlike retail with e-commerce and financial services with the fintech. And we still see there's a lot of needs from the industry players in terms of identifying solutions for them, whether it's kind of optimizing their portfolios, whether it's on kind of looking at kind of on marketplace in terms of distribution of their properties, or also on the climate side, or in terms of a lot of them have come to us like, can you help us in terms of decarbonizing our portfolio, or as we look to do new developments, identifying new solutions that are more sustainable and reduce kind of the carbon footprint. So we still are very bullish in terms of the opportunity, particularly on PropTech and climate tech globally. And different parts of the world have kind of different attributes. Like in the US, for example, it's more about retrofitting, whereas in this part of the world, it's more about new build. So you have different kind of solutions that address that.
Fantastic, thank you. And I think from Pi Labs as well, I've seen a few outlooks. So from your perspective as well, what are those emerging opportunities? Maybe if we even want to go a little bit beyond the typical opportunities that we see, and also what would be those hypes that actually are not that justified, I would say.
Sure. So, as a fund, we're a very research-led organization. Several years ago, we spun out the research function at University of Oxford, and we work essentially on identifying new trends. One of the things that we've been studying quite deeply is real estate fractionalization. And while this has taken off in certain geographies globally, particularly in the US, there's a few large players. Globally, it's quite a fragmented market. And there's some really interesting sort of underlying trends that we see in millennials looking to make investments in the real estate, but not necessarily having the bandwidth or the time to be able to actually manage a portfolio. And I think there's larger sort of trends that we see which would enable and be tailwinds for sectors like fractionalization. And that's sort of one aspect. The other topic that we've been researching is from a technology perspective, and there are certain technologies. One that we're not doing a deep dive in now is conversational AI. So not so much the ChatGPT, the generative AI, but more application of voice AI, and how you can apply that to PropTech and the wider ecosystem. And there's some really interesting business models and companies that are using deep tech to solve really interesting challenges. So I think those are two areas that we're deep diving into and might be interesting.
Wonderful, thank you. So dear cohort, we're already giving you some insights for your next venture. I hope you're taking notes. Mauricio, maybe very quickly, I've seen that your fund has invested also in robotics. And I know that the industrial sector is obviously a big sector, Industry 4.0, and one of the startups also is working on that. What's your take on that, and what's the opportunity within this robotic sector? If you want to.
Yeah, absolutely. So we're all aware about it, like what's the current ecosystem in which construction projects and real estate projects needs to be developed, right? So there's a high pressure on sustainability, increasing labor shortages, supply chain disruptions, inflation, material energy costs going up. So the big question is, how do we perform more bigger and more complex projects under these circumstances? And then the reason for me, I think it's, and I'm obviously very biased here, but it's through the adoption of technologies, right? So technologies that in different areas can really assist, take the most out of the current resources that we have in hand in order to perform these projects on time and on budget. And one of them, it's obviously robotics. So robotics we see as a very interesting enhancer of human capabilities, and how can you perform very repetitive but complex tasks, and the ones that are particularly being performed under circumstances that push for potential accidents, right? So under these circumstances, we see that robotics solutions really can play a very, very interesting role in the future, and it's one of the technologies that we're seeing as one of the highest potential. One of the things that I got from one general contractor in the US that it's implementing robotic solutions is that they need to increase their margins. And one of the ways that they are looking to increase their margins, it's by overtaking the jobs that they used to subcontract. Because now if they're able to implement a robotic solution that fully or at least partially replace the labor that the subcontractor are coming, then we see huge opportunities in these areas, right? But again, I think it's much broader than just efficiency. It goes towards safety. It goes towards better utilization of the materials, reducing the waste, and so on and so forth. So yeah, definitely robotics is one of the solutions that we see as more and more taking over. And by the way, just finishing my answer here, last year we conducted a survey over 80 VCs and CVCs in the construction and real estate industry. And we asked them if there were certain technologies that they would like to increase their investments, and robotics ranked third after sustainability and supply chain. So that was pretty interesting, because in this industry in the past few years, we haven't seen much of robotic solutions being implemented at scale.
Wonderful. Yeah, great source of optimization and cost efficiencies as well. Wonderful. Christos, just you've been in the region for a while, and we have a cohort which is not very familiar with the region. But overall, I mean, we know that unfortunately, as we said, there is a lot of uncertainty and all that. What's your perspective on the investment in the region? And also, a few tips if you had to give to the cohort as to, in time of uncertainty, how do you run your operations? How do you maximize your runway? Would be good to hear from you.
Absolutely, happy to share. So as you mentioned, I've been in the region now for, I guess, 15 years. I'm not from the region, but I've been here for a while. So I think definitely happy to share my regional perspective. Just a quick note on Proptech itself. I would say, real estate is undoubtedly a very large and strategic industry for both key markets like UAE and Saudi. And I think right now, as we speak, we're undergoing an unprecedented digitization of this sector here. And we're seeing a lot of talented entrepreneurs trying to tackle real problems here. At the same time, there's a lot of innovative startups from abroad entering the market to sort of import innovation. And I think in this equation, it's very important for how startups, team up with corporates. But we can talk about that a bit later. In terms of, as you said, it's an interesting time. There's a lot of uncertainty on multiple levels globally in key markets in terms of how the economies are going, and also the investor sentiment. I think the GCC in some ways is in a particular situation in the sense that the economies are still doing quite well. There's political and geopolitical stability, economic growth. However, some of the investor sentiment has cascaded inevitably here. And I think what we're seeing is, for example, some of the valuations cooling off, rounds taking a bit longer, rounds being a bit smaller, and generally, some more caution on the side of investors. So I think, having lived through the crisis of 2000 as an entrepreneur, and the crisis of 2000 in New York, and the crisis of 2008 as a corporate, I would say there's a few things that can be done sort of safeguard your business. I would say, number one is back to basics, and something that we should always focus on is really, work on building sustainable companies that are based on reasonable, unit economics, companies that will eventually be profitable, not growing sort of at all costs, and trying to build sustainable companies. I think this is a message, especially for now, but it's a message, I think, for, to be applied in any environment, in my humble view. Second of all, when it comes to fundraising, I think, I don't think, in the region that it's sort of, a very tough situation yet, but it may be coming quickly. So my advice to startups would be, raise earlier for longer periods of time, try to be a little bit flexible on the terms and the valuation, and generally just be a little bit more sort of practical on that front, because, you never know. And it would be a shame to fail because of, a runway in fundraising. The third thing is, I guess, more of an open-ended thing, is that, it's a very dynamic period of time in the region in general. So I think founders and startups need to be agile. Today is one reality, and then, a couple of months later, things are evolving. So I think, being flexible, being able to adapt to the new realities is important. But for now, I think, the first 2 points stand. Build sustainable companies, be disciplined on that front, and, be careful on your fundraising, and try to raise faster and for a longer period of time.
Wonderful. Thank you. Thank you, Christos. Maybe JP, from your perspective, more of a global perspective, are they one or two key tips that you would give the scale-ups here in terms of how to manage your runway? Where do you need to save additional costs, or if anything different from Christos?
Yeah, no, thanks for the question. I think I second everything Christos mentioned, but as a fund, we frequently talk about the efficiency of a startup. We talk about, has the startup gained some level of predictability in how the company can operate? And so when we are looking at a potential investment, we're looking at, has this company built a level of predictability, a level of repeatability that ultimately helps them extend runway and conserve cash? And as maybe to make it a little bit more tangible, we're working with a company in our portfolio now in the facilities management space, and they are going through a constant struggle of, is it the right time to go out and hire more folks to help us scale more quickly, or is it the right time to conserve cash? And ultimately, what that becomes a question of is, where do I spend my time in terms of which customers I should be spending my time, my team, and my resources on? And we're coaching that company specifically to spend time with the customers that have already adopted, because sometimes expanding an account that already exists may be a much cheaper sale than going out and trying to get a net new account, especially in a market downturn like the one we've experienced just recently and might continue to experience in the next 6 to 12 months. We are focusing, at least a few of our companies, on really that expand motion rather than that land motion, so that we can conserve cash a little bit longer, maybe not spend capital on things like marketing and new customer acquisition, just so that we go after the easy wins in the short term until the market really steadies itself and we can focus on building top of funnel once more.
Wonderful, thank you. And I guess it's quite challenging just to find this balance while managing your runway, as you said, while the opportunity around sustainability is right now. So, how do you also balance that? And speaking about sustainability, so once again, a lot of energy efficiency solutions and cost optimizations across the cohort over here. Nevertheless, there is a lot of growth opportunity, but some of the startups here find it difficult to scale up in a field which is a green field, a new field where the framework is not really there yet. And even the business partners, the commercial opportunities that they have, sometimes they need to educate even the other side, the business side. Fethi, maybe your opinion about that. How can a scale-up navigate into this green field, literally speaking, you name it, climate tech or clean or prop tech? What are your tips for them?
So I think two things. Number one, is it solving a problem for some of these real estate companies? And number two, is the solution from a price perspective kind of at least equal to or less than a solution that is not necessarily kind of a clean, should we say, clean tech solution? So most, particularly in the region, that we've spoken to, particularly the family groups and others, that when you talk to them about climate tech, they understand, but the first question is, well, is this more expensive as a solution than regular? Like, for example, one of our portfolio companies is a kind of a carbon neutral cement business called Brimstone and Energy. And is that, if we have that, is that cheaper or the same as normal, regular kind of concrete or cement, right? So you have to make sure that from a clean solution or a kind of a clean tech or a climate tech solution, it has to also be economically viable, because that's going to be a lot of the corporates may not necessarily be focused on just purely on sustainability in terms of kind of decarbonizing yet, in terms of particularly in the region. In the US, yes, because there are also some penalties, etc., that are going to come down to a lot of these corporates and real estate groups that do not address that. But in this region, it may be slightly different. But I think definitely, you have to kind of really address the solution. I think, within climate tech, real estate industry is the largest offender. It's like 40% of all CO2 emissions globally come from the real estate industry. And 29% of that is operationally for buildings, and 11% is construction, right? So kind of we focus on the pieces where there's the biggest spend in terms of where there needs to be the change or to address that. And I would say that if you're a company which is kind of coming up with a solution or an alternative to the current way of doing things, whether it's on the construction side or operational side, then make sure it really is addressing that, and it's kind of a scalable across different jurisdictions and across different kind of clients as well. That you're communicating your technology. Yeah.
Yeah. So cost efficiency, obviously, but maybe just accompanying those companies in educating them and seeing also the cost of not implementing solutions. Yeah. Because yes, 2050, net zero targets seem very far away, but what would be the cost of the duration of this time to the company if nothing is being done? Mauricio, maybe you're, before that, sorry, Fethi, you didn't mention that, but I've seen also that you have sustainable funds. I think that you've launched a couple of funds specifically for green tech.
No. So we launched a fund last year we closed a climate tech fund, which really addresses the kind of it's just focused on the real estate industry, everything from sourcing materials to construction to operations of buildings to end of life, how to get rid of a building in a much more sustainable way. So that whole value chain and adjacent industries like energy, EV charging or battery solutions, for example, for buildings for renewable. So that whole value chain and adjacent areas. That's what our climate tech fund focuses on.
Okay, brilliant. Thanks for the clarification.
Sure.
Mauricio, to you as well. So Zacua Ventures has, it seems, a very big focus on ESG itself. So what would be your advice to the startups here? So how to navigate this green field?
So I would actually focus a little bit more about like what a VC would like the startups while they're navigating this, right? I think that's a little bit more useful than I think that the startups will know much better from their own specific business how to navigate their customers. But it is clear, as Fethi said, that the cost, regulatory hazards, availability of raw materials or pre-existing conditions are the biggest challenges when addressing sustainability technologies, right? So I think that there are three areas in which we like actionable insights from startups about how they're actually navigating this. So in the first one, in terms of regulatory hazards, I'm talking primarily when we're referring about new materials, how do you actually push for regulatory approval for this, or how do you actually address and navigate different markets until you find that market or that customer that is able to go through this pressure. So just a very simple example when we're talking about like new concrete or reduced CO2 concrete, instead of making regulatory bodies approve that concrete for structural services, then most of the time they just go to the precast, because at the end of the day, regulatory on precast is much different, and you need just to prove the end quality of the concrete and resistance and properties, and not the raw materials that are embedded on that. So these are, in that case, maybe go to market, it's different, but these are the things that we like seeing, because I mean, yes, you can know the regulatory very well, but that's not a proof that in 1 or 2 years then you will have your product approved. So that's one example. On the second issue or challenge, which is the cost, I think that you have to show investors that you have a clear path and pre-identify levers to, in the short term, either find subsidies or alternative financing schemes for your customers in order just to bear the upfront capex that they may have to implement that more sustainable solution. And then in the long term, show that real cost optimization that you may reach out of economies of scale, tech improvements, raw material availability, and so on and so forth, right? And lastly, but not least, on the existing conditions, how do you push, how do you reduce that barriers for adoption? How do you do that requires a change of mindset from your customer, and then how do you push them to take the action today and not tomorrow? And I think that's where we like to see that you have a very clear go-to-market strategy in the short and long term, right? So which are the levers that you can pull in order to push for that transition, whether that's education, whether that's ease of adoption, whether economical benefits in the midterm that you can show, or a one-stop shop that I'm not just offering this solution, but I'm bringing the subsidies from the government, I'm bringing the financing scheme, I'm bringing the installer on board, so you don't really, it's easy for you to make that solution. It's not a capital efficiency, and for that, I think that again, having the right partnerships with all the different stakeholders involved into this, in order to bring this one-stop shop solution for your customer, I think that this will be the three main tips that I would advise you to show to a VC.
Thank you. And very quickly, maybe from my side as well, another from a governance perspective, maybe a suggestion. Think about, your board of directors and look into non-executive board members that have this expertise from the industry. And if you aim to target, utility companies or you name it, try to maybe propose, one of those experts that you can identify at the global scale being part of your board. And that is also somehow to, to bring some know-how, additional expertise of this industry internally. Brilliant. So moving on, Christos, I see you sitting back. I'll bring you on the front. So we've spoken quite a bit about the region here, and I briefed in detail the cohort, about the opportunities, but also the challenges. But still, from your side, you've seen it and experienced it. What are your tips? How do you scale in the region? If there were 3 or 5 things that the guys should do, how do you scale in the GCC?
Sure, no, thanks for that question. I think having been in the region for a while, I think we need to describe things as they are. There's a myth that it's one region. MENA region is one region, but unfortunately it's, 28 or so countries. And that is a reality that you have to deal with as a startup and as an investor. So that means, you have, a couple dozen of regulators to deal with and different, legal frameworks and different market dynamics and etc. So I think it's quite challenging to scale in the region as a founder, as a startup. And I think our philosophy, at least, is that this is where startups need to team up with active and very hands-on investors in the region. I think there can be a very strong combination there where you have global VCs investing in regional startups. They bring global know-how, and then you need sort of some regional investors such as Iliad to sort of help, clear things on the ground and help push things forward. But I think, just to make things tangible, I would say, I think one of our success stories is Trucker. Maybe to give you a quick example there, when we first invested in Trucker, they were purely a UAE company in digitizing the road freight industry. Of course, it's not Proptech, but I think it can be a good example of some of the learnings for scaling in general in the region. So that, they were a UAE company, B2C, and they had they had good technology and some regional ambitions. So we worked with them closely to sort of move into B2B, and that enabled them to team up with some big corporates. I think that's very important if you're obviously a B2B company here in the region. They focused on being an asset-light company. I think that was very important. Building strong local teams in the new markets they entered. Raising a good mix of equity and debt. Until recently, debt was not really available to companies in the region, so that was very important, especially in terms of tackling their working capital. Prioritizing key markets. So the next market they moved into was Saudi, and also working with investors that could really help them. But some of the key things is, first of all, there's some not so exciting things that need to be done, but have to be there for the backbone of startups in the region to scale. Having a strong finance function, having a strong finance function to be able to manage the company, and also the fundraising. You mentioned governance, that's very important, making that really institutionalizing that. And from there on, having investors who can actively open doors on business development, helping with regional expansion. That is a pretty involved process, whether it's setting up the licenses, recruiting local teams, getting local clients in each of the industries, in each of the markets. So, and then of course, supporting on subsequent debt and equity raises. So I guess to make a long story short, we were fortunate because subsequent to our investment, we were joined by some large investors like STV, IFC, ADQ, and Mubadala, and the company scaled to MENA, then to Saudi, then to Egypt, then to Central Asia, and then to Eastern Europe. That's not very common, but I think a lot of these key building blocks enable them to achieve that. I think in conclusion, I would say it's not easy, but it can be done, and with the right team and the right investors.
Thank you. Thank you for finishing at least on a slightly positive note, but it's good, and we gave also a very transparent, overview of what happens in the region. Fethi, very quickly, because we still have a few very interesting questions coming up. Yeah. Your perspective, global Proptech, but you've been in the region also. 2 or 3 tips. What happens here in the region when you want to scale that is different from what we see at the global level?
Yeah, I think, a lot of it is what Christos said. And by the way, Christos and I worked together on Trucker, where I used to be a venture partner at Iliad, just to put it out there. But yeah, I've been here for over 20 years as well, and 20 years as well. And I think the region has evolved over the years, but there weren't as many tools that enabled companies to grow as maybe they were in more established VC tech markets, right? So kind of venture debt wasn't available, and others where a lot of businesses can be capital intensive. You don't really just want fund expansion through equity, because you don't want to dilute yourself just through kind of so you will need other areas. But I think you also need kind of a good management team, experienced team, which is also nimble and able to kind of evolve and really understand the dynamics and kind of move around. You'll need a good board to support you. You'll need really, I think it's a unique region because it's still very nascent, and so there's a lot that you can learn from outside as well, in terms of having advisors as well to help you, because there are some traps that you may fall in the region that people have experienced in more mature markets, so you can kind of use experiences from out there. But I think it's a great market because it's still new, right? It's still virgin in a lot of ways, which means there's a lot of opportunities. And that's why you've seen a growth in venture, growth in tech startups. You've had some failures, you probably need some more failures, I would say, so that people learn more from the mistakes of what's happened. I think there's a lot of money that's gone into deals, into companies that We'll see kind of whether all these survive. But I think it's a great area to learn and to build out. There's a very large youth population. Obviously, people becoming more tech savvy. The companies and the customers and the end users of a lot of these technologies, there is that education process that needs to happen as well with them. So I think there's kind of multiple areas that needs to be, for the whole ecosystem kind of to continue to develop. But I think we are in the right direction. And now you're seeing international players coming into the region, which is a validation of what's going on in the region, which means it'll give more confidence for more startups regionally and internationally to come to the region. I think it's all very positive in terms of what we're seeing, and hopefully we'll develop and we'll have many more successful startups in the region.
Great, super. And also indeed seeing, 500 startup and other, VCs and other incubators getting really a lot of interest here in terms of investment. That also gives a sign of or some comfort for the companies to scale also over here.
Yeah.
So moving back to the global perspective, we have a lot of expertise around the PropTech here. As a VC, what are the red flags and the green flags that you look for in a PropTech before you give additional fund? Mauricio, you already gave your answer, so I'm not going to ask you. But maybe Dhruv, if you want to start, like red flags, the things that you don't want to see, but also green flags.
Sure, no, happy to. So I think the way we look at it, whether it's PropTech or really any other sector, what we look for in companies, I would start with the positives really. At the outset, what we're looking for is at least at the early stage, a fantastic team that complements each other really well, understands the market, has deep domain knowledge, and is really capable of building something on their own right at the get-go. This is really at the really early stage. What we look for is a large market which is scalable, and the product that the company is working on can actually be scaled and doesn't necessarily have a lot of the challenges that we might see with point solutions that might not necessarily scale. And I think, of course, when you dive a little bit deeper, you want to really, as Pi Labs, we've recently been focusing on a lot of investments on the deep tech side, where essentially there's a technology moat beyond the traditional business model moat or business model innovation that one might see, because those businesses are generally much harder to actually replicate, and there's generally much less competition that you would generally expect. In terms of, I wouldn't say whether red flags is sort of the right word, but certain things that concern us are if there's a team where we think it's incomplete, or whether the tech is outsourced. They might essentially, we've seen companies that sometimes work with third-party providers or consultants to actually build some of the core technology that would not necessarily be a company would take forward. In some cases, we've also seen certain hypes. So for example, just to give an example, Picasso in the US did really well, has received a lot of funding. And I think that's one model where we saw there's quite a few copycats globally. And I think what we also find quite challenging is when founders, really smart founders, jump into business models simply because there's capital going in there. So we like to see what we call sort of founder market fit, where a founder really sort of believes in what they're building and can deliver. So I think these are some of the things that we look for from an early stage perspective, at least.
Wonderful. So, okay, some sort of stickiness, or be loyal to what you really like. Perfect. JP, from your side, any additional, things that you really look for when you invest into PropTech versus those that you really don't want to see?
Yeah, and in several regards, I think it's nice to respond after Dhruv, because we do about 70% of our deals at the Series A. So, I think the things that we might look for they're very much so complementary to Pi Labs' strategy, although maybe one or two stages a little later. And to answer your question directly, I might sound like a broken record at the end of this, but again, predictability is something that we are particularly excited about. And efficiency, again, just to use that keyword once more, and what that looks like tangibly is we are very much so a metrics-driven fund. We like looking at metrics, and I think the 2 or 3 metrics that might directionally point toward a very efficient go-to-market function are things like net dollar retention, particularly, and also payback of your customer acquisition cost. In this market, again, we're coaching our portfolio to be very efficient with their capital, and sometimes going after a captive sale with an account you already have might be a cheaper go-to-market than going out and trying to find a net new sale. So we look for net dollar retention percentages as a really nice indicator that something is working and your solution is a needed solution by the customer in question. And beyond that as well, speaking to the customer acquisition or the payback of customer acquisition cost, to us, that signals your ability to have a very efficient go-to-market engine. You're not having to pay too much for a new customer to acquire. And if folks are interested in what too much or too little means, or whatever that spectrum is in terms of how Camber Creek thinks about it, I'd be happy to have an offline. But customer acquisition payback is something we also pay very close attention to, because while net dollar retention might signal you're able to expand within an account, if you're not able to pay back your customer acquisition costs, you might not be going to market quite as efficiently as you think you are. To make it very tangible, we've been speaking to a number of construction tech companies in the United States, and one in particular is a competitor to a large company called OpenSpace that many of you are familiar with, and several of you on this call, I'm sure, might be even investors in. But they have a really interesting phenomenon going on where they have upwards of 200% net dollar retention, which signals something's working with their existing customers. But when you kind of dig below the surface and take a look at how long it actually takes them to pay back their CAC, you're looking at 60, 70, 80, 90 months, which signals to us that something is just not working. So those two things very much so need to be working in sync, in our opinion. And if you are running up against a fund like Camber Creek that does look into metrics, those two might be a piece of the narrative that you might want to infuse.
Thanks for getting really tangible tips over here. Just an additional question from my side, JP, how can you build so much predictability on an emerging market?
Yeah, so it's interesting. So I'm going to pull a framework from my old strategy consulting days that I use. I won't say our fund uses it, but it's one that I find particularly helpful. There's a framework I used to use called awareness, consideration, preference that I think many people might be familiar with on this call. And if you think about that framework as a spectrum for a customer's readiness to adopt, it's often helpful to use in terms of where you should be allocating your resources, your time, and your team. So just to dig a little bit deeper into what that means, awareness just basically means the customer is aware that your product exists and provides some level of value. They might not know what the value is, but they know it provides some value. Consideration is they might have thought about your product as a possible solution for whatever need they have. And then preferences, they've either chosen or purchased your product, or they've purchased a competing product. In an emerging market, I would say, from A to P, awareness to preference, A is very much so the customer may not necessarily be ready to adopt. And so what that means for our companies is when you have that uncertainty, it's very helpful to get a firm grasp of your ideal customer profile. Who is farther along that spectrum toward consideration, or maybe even to preference, that might be a bit easier of a sale for you and your company. And there are easy ways potentially to take a look for signals that say a customer is ready to adopt. Things like they've expressed interest in some sort of press release, or they've adopted a competing or an adjacent solution. So if you know that your ideal customer profile is a subset of a very large market, and to Christos's point, the Middle East is a very large market, you'll have a little bit easier of a time, in our perspective, honing in on the smaller subsegment of customer profiles if you have that customer profile really tight and really concise. So that's the framework I would suggest.
Super. And just this idea of, go and monitor the what your key customers are doing, how they are behaving on the market with regards to your own market or the adjacent market that you be targeting as well. I think it's a good indicator of the readiness that they have to adopt your product. Great. So moving on to the last question, because I would like to give some time also for Q&A, of course. So we've seen what VCs look into the startups. But actually, I would like to ask the reverse question. What should startups or scale-ups in the PropTech industry look for when selecting the VCs beyond the funding? What are these additional value-added services and the value creation that they should actually look for? And what are the key questions that they could ask to make sure that the VC is really going to bring this additional value they look for? Fethi, maybe if you want to shed some light on that.
Yeah, sure, absolutely. I think obviously, beyond getting the capital, I think it's very important to see what value added that a VC can provide a startup. So, for example, can they help in terms of distribution, in terms of selling your product to the industry, right? So for example, as I said earlier, we have 110 real estate groups globally that are investors and partners with us, right? And what we do actually is we actively introduce our portfolio companies to these strategic LPs, the real estate companies, right? So it's very important to make sure that kind of, there's value added in terms of introductions, in terms of really adding value, but also in terms of what experiences has the VC had in similar models or similar businesses that they can apply to this, where the company's either failed or been successful. And it could be in this subsector, or it could be in other industries they've looked at. But I think it really is very important that kind of you as startups look at kind of the value added that the VCs provide, whether it's through networks, whether it's through experiences. Obviously, capital is important, and that's key, but that's not just the only thing. There's a lot of, in some, at least more mature markets, and even here, I suppose to extent, there's a lot of capital chasing deals, but it's important to have those other elements that, there's tangible benefits that you will see as a startup, as part of this partnership.
Perfect. Dhruv, to you, maybe additional, I remember you just mentioned some key questions. What are those questions that, it's good to ask?
No, absolutely. I would, perhaps break this down into sort of two segments of when you're actually fundraising and once you have multiple term sheets, because the kind of questions that you ask might be slightly different. I think maybe focusing on the latter, assuming you're looking to identify what the right cap table looks like and who you want to bring on. I think I would recommend that, to Fethi's point, that you would ask the investor to give you tangible examples of other portfolio companies that they have helped. How have they added value? Understand, in many cases, many great VCs actually start helping and adding value even really early on, as we track and monitor companies even before we make investments. And I think that's generally a very positive sign of what you can expect from the relationship even after they've invested. I think also it's really important to understand how much are they actually investing and what that means in terms of their contribution to the cap table. Because often what we see is if you have a great VC that's, perhaps writing a very small check, you may not necessarily be top of mind for them. So it's really important that you actually have buy-in and sufficient holding, that they're genuinely interested in your business to actually support and give you time. Because often we see, founders may essentially have a cap table full of several smaller investors and not necessarily anybody taking a lead. So it's really important that you identify the right lead who can actually support and give you time. Just, I guess, couple of really small points on when you're early in the process. VC fundraising process should be run like a really tight sales process, where you essentially have a proper CRM tool. You have discovery conversations, figure out which ones are actually interested and really focus on them, rather than trying to sort of pick up conversations on a repeated basis with investors that might not necessarily be as keen. It's also really important to actually do a bit of DD and understand where the fund might be in their own life cycle. Do they actually have capital to deploy? Because often you find the case that it's possible that the fund may be in the wrong life cycle and may not actually be the right partner to be able to invest. So I think there's quite a few questions that you should ask early on as well, just to make sure that you're using your time really efficiently. Because ultimately, we would always advise our founders that ideally you should spend as little time as possible fundraising so you can go back to building your business. and just make the process super efficient.
Thank you. Great. Anything to add for that one? And then we'll just close with your few tips. No? Okay. So basically access to market, access to funding, of course, maybe access to talent. I don't know, is it the role of the VC really maybe to guide towards the right additional partner within a startup?
Yeah, I think they can definitely help in terms of, we've done this, with Christos in the past, with the trucker example, for example, but also in this Fethi, we help identify right, CFO or finance function, or certain functions that are critical, or sales, for example, certain functions that are critical for a business to grow or to scale. Then yes, definitely the VC can also add value there and help. Yeah. Because again, they've seen a lot of similar companies, so they can see what works or does not, particularly in different life cycles of that company. Okay,
although you have some competition with venture studios on that front, but it's a fair competition. Perfect. So closing down, almost to the hour. Final tips: 1, 2, 3 tips. The typical closing question, but it's always good to give your final short answers and tips to the cohort, if you may. I'll let Christos get ready. Mauricio, you seem to be ready to jump in, so go ahead.
Yeah, so one of the key things that I've been asked by startups is, what do they do under there's circumstances in which fundraising is very hard. So what we are advising all of our portfolio startups is that try to keep a burn ratio over sales that it's close to 2, even a little bit less will be ideal, 1.5. These are metrics that VCs like to see, and try to extend your runway as far as much as possible, even for Q2 2024, in which we are expecting the ecosystem to start improving, hopefully. And in order to do that, the easiest thing will be just get your existing investors convinced on doing a small bridge. Same circumstances at your last fundraising, so not to expect much on the valuation side, even if your sales have increased, but at least you get that headache out of your head during this year, and then in 2024, hopefully things will be much different.
Thank you. JP?
Yeah, I know I've talked predictability and efficiency, so I'm going to say something a little bit different. I think many of the folks on this call might be in the position to be hiring or looking for folks to staff up your team, particularly in key functions. And having just gone through a couple of exercises where a senior leader was brought into the company and things didn't work out, and we had to go back to market to replace that senior leader, I would say now is a really good time to make sure you're putting the right people around you. Make sure your process for hiring new folks, particularly at the senior level, if you are hiring, is tight. You're hiring the right people with experience to sell your products. They have good references, because going back into market for folks to rehire or to replace positions can be a tenuous one. But if you're staffed up well and have the right people around you, you're setting yourself up for incrementally more success, hopefully.
Great, thank you. Dhruv.
Sure. So make 2 points. I think one, it's and many people would have read this already, but investors invest in lines and not in dots. What I would really suggest is, with your existing investors and prospective investors that you may have spoken to in the past, make sure you keep them updated on a regular basis. I think from a fundraising perspective, your journey is a lot easier if investors have a lot of context already and you're not reaching out afresh. Another piece I would say is, these are really tough times, and we see from a wellness perspective, quite a few of our founders really working hard. And I would just say that, I think mental wellness, well-being is really important. And if you burn out, you're not going to be able to build a business. So while working hard is really important, just make sure you keep a balance as well for yourself and for your team.
Beautiful. Christos.
Thank you. I'll preface my advice with a more general comment, because you brought up the issue before. So I am, and we are very optimistic about the region. And I think this is definitely there. I think the advice I was sharing before was about in potentially difficult times, how can founders be resilient and be successful despite any challenges, especially in a fragmented market like MENA. I mention this because it's very important. If you look at sort of the long-term view on the region, it's really amazing what's happening and the transformation that's happening currently. I think, we're all excited to be part of this, and we're keen to help founders succeed. But to your core question, I would say, 2 or 3 key things. I would go back to the basic message of, building companies that are sustainable, companies that have the right unit economics to succeed in the long term. I think, as JP said, efficiency is very important, especially in uncertain times. I would say the second thing is the right investors, and I would just clarify, it's plural, and it's about having the right mix of investors. I don't think one single investor can bring you everything you need. As a founder, if I were you, I would sort of kind of match what I need in terms of, growing my business and bringing, these smart people around the table, and hopefully they can be part of your round and part of your captive. And this can vary, whether it's global domain expertise, regional know-how, business development, each startup has different needs, but there's definitely some core things that they sort of, need to cover. And I think the last thing, it just comes down to really execution, and especially when it comes to B2B startups in Proptech. I think showing traction with large reputable corporates, and in this case in the region with family groups that have interest in real estate is very important. And I think that gives a lot of confidence to investors as you grow the business. So those are just a few parting thoughts.
Great. Fethi, last word to you.
Yeah, I think, obviously a lot is covered, but I think, cash management is very important as well, particularly during tough times. Make sure you manage your cash well, having the right team to execute, the key team members, and make sure you have the right, functions and what have you. And what else? Information flow, no surprises to VCs, because we don't like surprises, right? So making sure that there's that information flow. And I think, everything else that was mentioned, I think it's absolutely right. Having the right group of VCs as well as so yeah.
Wonderful. And maybe just one final comment from my side as well. If you've got less business in the pipeline right now, look at your processes, well-established governance processes, and try to make them stronger. And whenever markets are getting better, this is definitely, I think VCs are looking at that, and good processes in place, not the funniest stuff, but definitely, good ground for additional growth. With all this, we're done from our side, but now we would like to give the floor to you. So please, if you've got some questions to our fantastic panelists, just maybe unmic yourself, and if there are too many questions, we'll ask you to raise your hands.
You?
Yes, please. Go ahead, David.
Yeah, I'm David. Thank you very much for all the people. It was very interesting. My question is very clear. It makes sense, to take as metric the saving cost for energy when in a region the energy cost is very cheap. It's for Middle East or UAE.
Any perspective from your sides? I have my view on the topic, but I leave it to you. Look, maybe just in the meantime, you need to look at the component of cost cheapness over the duration of the year, right? As I said before, we're using AC. My AC is on right now, 8 months a year. So, and also in terms of rates of energy, each emirate is offering very, very different rates. So I know that Abu Dhabi, is much cheaper than Dubai. So look into the specifics and don't assume that the energy cost is cheap in the region. On the data center front, because I've worked quite extensively on that side, I can tell you that we've been struggling to bring a lot of the the wholesale players and the large players because of the cost of utility. So yes, don't assume that this is cheap. This is my suggestion.
Thank you very much.
Other question. This is your chance.
I see your hands up. You can go off mute and ask.
Okay, thank you. So COVID hit the supply chain problems came about. The pharmaceutical sector in particular suffered a lot, and they started really heavily deploying analytics and blockchain technology to trace. It's for traceability. It's for making sure that promised goods are delivered on time, blah blah blah. So, given that at Vislor, we are based in Arizona, and we have invested heavily in analytics and blockchain. Excuse me. So, I wonder how open the Proptech sector to deploying analytics and blockchain technology. Now, I don't mean public blockchain, I mean a private blockchain. Data is private, but it's still traceable, still immutable. How open the real estate and Proptech sector to technologies such as analytics and blockchain?
Happy to kick us off. So I'll speak a little bit more to the analytics side, mainly because we don't have a captive investment in blockchain just yet, but I would love to hear from others on the panel. But on analytics, you bring something up that's very interesting. It's the concept of traceability, and I think that phenomenon, having more visibility into some value chain, whatever that value chain is of desire within the real estate market. And I'll give you an example. We have a company called Virtual Facility, which deploys a really rigorous analytics solution to critical infrastructure. And right now, what they do is they allow hospitals, data centers, and a variety of other asset classes to understand when an alarm goes off, which alarm is most critical to respond to first. And most people might not realize that in a hospital setting, a hospital might receive 5,000 alarms in a given week. And if you only have 2 building operations engineers, they might not know which one to go and fix first, right? And that becomes a problem if you begin ignoring alarms and don't fix the right alarm, and maybe an operating room goes down, you lose millions of dollars. But what the solution really gets to is this idea of analytics providing a better insight into traceability of how the operations team is actually doing their work. So from Virtual Facilities standpoint, I would say that market, particularly in critical infrastructure and assets of that type, is very receptive to analytics to help them do their job better. And we also have companies like Measurable that help with building benchmarking and ESG, that is basically a very robust analytics solution for understanding how your buildings perform from a sustainability standpoint. So long-winded way of saying, I believe the real estate market is quite open to analytics, and would be curious to hear from others on the blockchain piece.
Thank you. If no additional comment, I'll share a link very shortly on a fantastic exercise and analysis of across the value chain of construction, the potential blockchain uses. And they're massive, from the design perspective all the way down to the construction sites with smart contracts. So a lot of opportunities are there. Now, how mature is the market to adopt that? I guess it goes down to the maturity of the player that you target specifically. We've worked with ALEC and CCC. They were looking at smart contracts using blockchain. So it all depends on the player that you target. Any additional question?
There's one in the chat, Clio, that asks, so Gaurav asks, what trends are you seeing in the Middle East PropTech industry in 2023? And how do you think those trends will shape the future of real estate in the region? Were you able to hear my question? Yep, we're good. Any takers on this one?
So without being specific in the region, I may let the locals to respond. But what we're seeing primarily on the Middle East is that there's still all across the value chain of the built environment, from design, construction, even operations and maintenance. We're seeing that there's a huge potential yet to improve the fragmentation of this industry. So anything around not only digitization of the processes, which we consider as a first step in digitization and technology adoption, but actually the second step, so going through an improved coordination, improved communication among the different stakeholders, bringing much more transparency, which is one of the things that in this particular region, we see that there's a huge opportunity to be improved. And then around sustainability, I've actually been quite impressed when I'm speaking with all the companies there, that a year ago, maybe, or 2 years ago, I haven't heard much requests on different type of sustainability technologies, but now it seems that there's a huge take towards sustainability. So anything related with that will be a huge trend now in the region. And as we move outside the real estate sector to more the mega projects, I think that everything around sustainability, efficiency, and how to take much better like advantage of the existing resources will be key. So if they need to do 2,000 river cages a day for mega projects, then they do need to bring some automation to these processes. So anything that can help this, again, outside the real estate sector, more on the mega projects, on infrastructure, I think that would also be a key trend in this region.
Yeah, I can add to that. I mean, on the Proptech side, definitely we're seeing a lot of interest on kind of new solutions, new technologies, software, whether it's kind of management of portfolio management, or whether it's kind of marketplaces, or whether it's kind of new solutions across UAE, Saudi, even Bahrain, elsewhere, for Proptech solutions. And because it's really lagged behind, and that's kind of, it's still in its infancy. On the climate tech, I think you're right. I think predominantly driven by these new mega projects, particularly in Saudi Arabia, that are actually trying to be developed in a very sustainable way, whether it's like the neons, etc. And they really are trying to embed new technologies and new sustainable ways of building these. To an extent as well, UAE, but it's definitely, we're seeing that more in Saudi, more in the kind of what we call the climate tech. So we're very bullish actually about the region on both sides. Yeah, and as I said before, there's this lag in terms of Proptech within the region, whereas kind of real estate is probably the largest non-oil and gas contributor to GDP, right? There's so much going on, but there's very little from a Proptech perspective, so that will happen as well. So we're very bullish.
Any additional view?
I was just going to add some of the sort of the themes or sub verticals that we're seeing either gaps or activity. It ranges, from very basic stuff from property management, facilities management, onto more intricate needs of the industry, construction tech. I think fintech for Proptech is going to be a very interesting area for us here in the region. Online mortgage, rent financing, other areas, including how we invest in real estate. Dhruv mentioned fractional ownership. We've seen some activity here, which is quite interesting. In other areas like broker disintermediation, corporate accommodation, flexible workplace, etc. I think the main message there, that's kind of a laundry list. I would say there's a lot of white spaces. There's still a lot of gaps, and I think we have a lot to learn from global players and global expertise, and we're quite excited about digitizing and potentially also disrupting some of these areas.
Great, and maybe just to conclude on that, again, the market is nascent, so there are some simple property management solutions that I've seen, large players still working with very old-fashioned solutions. So if there is a solution that provides, visibility, traceability across the portfolio of assets, which sometimes is really, really wide, those things are to transparency, and they would be valuable. So conscious of time, I think we don't have any additional question. A big thank you from my side. That was really, really insightful. Thank you for connecting from the US to Europe, to the region, and to London. Where do we place London anymore? I don't know. Is it Europe? No, never mind. Big thank you again, Aldar, for creating the platform to have these kind of discussions here, and to startAD, of course, for facilitating all that.
Yeah, thank you everyone. Mauricio, Christos, Fethi, JP, Dhruv, thank you so much for your time and your insights. It was a very enjoyable panel. And Clio, thank you so much for moderating it as well. I wish you all a great day ahead, and the startups, thank you for joining.
Thanks, everybody.
Thank you.
Thanks, everyone.
Thank you.
Thank you for having us.
Guys.
Thank you very much.
Bye.
Bye.
Bye, everyone.
Bye-bye.